Hey everybody, my name is Brandon from StockTrenders.com, and today I want to talk about Smile Direct Club stock, ticker symbol SDC, and how it is down about 50% in 6 months. What I want to do first is go into Google and talk about the macro picture of Smile Direct Club, and then I want to go into the earnings report to talk about how Smile Direct Club is doing as a business, and then I want to go into the trend charts to see if there's a level or two to buy Smile Direct Club if we want to buy Smile Direct Club. So now let's get started. So here we are on Google, and here's a 6-month view of Smile Direct Club stock charts here, and we can see that in about 6 months, we are down more than 48%. Of course, this may be a trick of the time scale here, so we should always look at the performance of the stock at different time points to get the entire picture of how the stock has been acting in the past. So besides the 6-month view, we should also look at this 1-year view, where we can see we are again down about 55%, or the max all-time view, where it shows the price action since the company went public. And we can see since the company went public, we are down over 70%. So the first point here is that we see honestly terrible price action since Smile Direct Club went public. But the real question here is why? Because if we scroll down here at the news, we can actually see some bullish activity in the articles on Smile Direct Club. So again, why is Smile Direct Club off more than 70% since it went public, even though we see some bullish articles here? So first things first, just quickly so that we're all on the same page on what Smile Direct Club actually does, this is a direct-to-consumer or DTC company that helps people make their teeth look nice. They are mostly known for their aligners, where basically if you have crooked teeth, you can have something sent to your house, or you can go into one of their locations to make a 3D model of your teeth. Once they have the 3D model, they'll print out a retainer looking thing that will gradually move your teeth straighter. And you can see that they also have some teeth whitening products as well. So after talking about their products, this gets me to the first point of the video here. One of my main points is that the total addressable market for Smile Direct Club seems huge. I obviously have teeth, and I'm sure a lot of you have teeth as well. Especially as the health crisis is ending, people will likely be emerging out from their houses to rejoin the public. And a lot of these people want to look good so that when they see their friends for the first time in public in a couple of years, and one of the ways to look good is by having straight teeth, as this article from Wall Street Journal talks about. However, of course, not every person in America cares if they look good or not, and this is my second point of the video here. Even though there is a huge total addressable market of about 328 million people in America who have teeth that could be aligned or could be whitened, only 4 million people in America, less than 2% of the total population, are actually wearing braces according to this Pennsylvania Dental Association. Also, how many people in your life do you know that had to wear braces twice? If I were to speculate, I would expect that each customer buying the teeth alignment plan would only be a one-time customer. So the main point I'm trying to make here is that macro picture, even though the total addressable market may seem large at first, it's just a fact that a lot of these 328 million people will likely not need braces. And furthermore, even if they do need braces or they do want to align their teeth better, people only probably need braces or alignments once. And there are many competitors out there that are trying to steal Smile Direct's lunch. Companies like Invisalign, companies like Bite, or more obviously, traditional dentist offices. Investors looking at the Smile Direct Club should be thinking about these things and if Smile Direct can continue growing and capturing parts of the total addressable market of this pool of 328 million people. So with all that said, now let's carry on to see how Smile Direct Club is doing as a business by heading on into its earnings report. So here we are in Smile Direct Club's earnings report, and this is the most recent quarter here for the 3 months ending on June 30th, 2021, which is this column here, and that is compared to a year-over-year view for the same period last year of 2020. First things first, top line revenues, which is this line on the earnings report right here, we can see that we are growing pretty fantastically actually, up over 70% year over year. We are growing from about $107 million last year to $174 million this year. And that is very, very impressive. And that is definitely what I want to see in a growth company. What's even more impressive, however, is take a look at the controlling of costs of revenues here. We can look at this cost of revenues line here on the earnings report. We can see that it is basically unchanged year over year, even though they are increasing revenues by 70%. If we look year over year, we're actually decreasing the cost that we're spending on revenues here. That is extremely impressive, and honestly to me makes me a little bit skeptical, because I have no idea how any business is able to increase the amount of things that they are selling by 70% without increasing their costs of all of that. To me, that is a little bit sketchy, but those numbers are the numbers that they are reporting. And if we look at the math here on those numbers, if we take how much money we are gaining from the business in the total revenues here and subtracting the cost of that revenues here, that is how you get this gross profit number right here on this blue line of the earnings report. Obviously, because we are growing sales by more than 70% and keeping our costs the same on paper, we obviously are seeing fantastic growth in the profit margins and the gross profit year over year, more than doubling, about 60 million gross profit last year. Again, these are very, very good top line numbers here in my opinion. This is telling me that Smile Direct is attracting quite a bit of new customers from the total addressable market, which we talked about in the previous section of the video. But now we come to talk about the operating expenses part of this video here, which are these couple of lines on the earnings report here: marketing, sales, and general administrative expenses here. Those are the operating expenses, and we can see that year over year, look at that increase in marketing and selling. That is about a tripling of expenses year over year in marketing and selling. Smile Direct Club is really turning on the spending machine for marketing and sales and expenses here. And I know most of the time I say I never want to see any increase in spending in operating expenses for any category that is not research and development, but Smile Direct Club is in a little bit of a unique situation here in that their total addressable market again is huge. As a young company, as a company that is competing against other well-known companies like Align Technologies with Invisalign, and especially competing against traditional dentist offices, which I think is the biggest hurdle to companies like Smile Direct Club, I am actually okay with spending this amount of money for the potential growth in the name recognition. What Smile Direct Club is trying to do is that it's trying to buy its way to new customers. So this astounding increase in marketing and selling, again, is all right to me as long as we are seeing this continued revenue growth, which we had been seeing year over year. But with that said, because the amount of money coming in from our top line revenues up here is outpacing the increased spending for the operating expenses down here, we can see that our loss from operations here, which is this line on the earnings report, is decreasing year over year. And again, that is a good sign. And if we also look at the net loss here, we see the same story where our net loss is basically cut in half year over year to our current loss of $55 million. This again is a step in the right direction. However, investors do have to note that a net loss is still a net loss. Basically, the company is still losing money. Even though that is normal for growth companies, it is still a risk that investors carry, especially when interest rates are rising like they have been. So with all that said, now let's head on over to the trading charts to see if there's a level or two to buy Smile Direct Club if we want to buy Smile Direct Club. So here we are in Smile Direct Club's trading charts, and we can see what a roller coaster we have been on from this $10 level here back in June all the way back down to where we are now, about the $5.25 level. So first things first, this is an incredibly volatile stock. Some of these moves here are moves of about 10%, and this move today was about 7%. So this stock is definitely not for the faint of heart. I want to first talk a little bit about the trading levels here for Smile Direct Club now, and we can see that we are actually right at a support level around this $5.25 level made for the bottoms of this candle over here, the tops of these candles over here, and the mid-ranges of these candles over here. However, I think if we break from this $5.25 level support level, the one that we're standing on right now, then we could be heading on all the way back down to the bottoms of these candles over here around the $4.60 level. However, if we look now for the resistance levels, I think there's a pretty clear resistance level up here around the $6.50 to $7 level here, which are made for the mid-ranges of these candles over here and the bottoms of these candles over here. So just doing some math here, from this $4.50 level to where we are right now, that is about a 10 to 12% downside risk. However, from where we are right now to this $6.50 to $7 resistance level, that is about a 30% upside risk here. So honestly, I think right now, where we are right now, around the $5.25 level, could be a good place to step into the stock because of the risk reward. However, because of the incredible volatility in the name, I think that using options actually could be a safer way to manage some risk here. I think if an investor wanted to put some money to work into Smile Direct Club, even though the $5.25 appears to be a decent support level, I think I would be looking more to fill out my position down here around the $4.60 level. Lastly, talking about the MACD and RSI here, if we look at the MACD chart, which is this one here, we can see that our blue line, representing our short-term momentum, has just crossed over negative underneath our orange line here, which is our long-term momentum here. That is representing that our short-term momentum is weaker than our long-term momentum, which is normally a bearish sign for the stock, which could mean that there could be more downside risk to go. If we look at the RSI chart down here, it also looks to be softening a little bit as well. So that was my review on Smile Direct Club. Let me know what you thought about it in the comment section down below. If you have any questions or if you caught any mistakes, also drop me a comment down below. If you liked the video, please like the video. If you haven't subscribed yet, please subscribe. And as always, thanks for watching, and I hope you have a great day.